Now, I spent quite a bit of time on my other podcast segments talking about the crash of FTX and what that means for the greater cryptocurrency market and financial market overall. I'm not going to rehash everything that I've been through, but I do want to rehash some of it, which is that a couple things is one, you need to be aware that there is still probably quite a bit of contagion that could spread from here. So if you're in the cryptocurrency space at all, don't think that the worst is over. I think the worst might still be to come. Now, I don't know this for sure, but what happens is the smaller players go down first, and then it takes the bigger players, the bigger players, the bigger players, and so forth. And FTX is the second largest cryptocurrency exchange, but there's even bigger players or other similarly big players that are not exchanges, but they're in the mix. And so one of those is cryptocurrency lender Genesis. And Genesis is a company that's kind of behind the scenes, and they work with all these companies, taking custody of their funds, holding them for them, and providing liquidity by doing loans and things like that. And what we saw this week is that crypto lender Genesis had to suspend withdrawals after the FTX collapse. Because what happens is all of these people have contagion, right? They're all interrelated. They all have money here, money there. And so when they lose a big chunk of money here, that creates a problem over there. And the demise of FTX created an unprecedented turmoil for Genesis, says this article in the Wall Street Journal, causing the company's lending arm to be unable to meet their withdrawal request. Because what happens is, it's called a bank run because it typically happens with banks, and now we're seeing it happen in the cryptocurrency space. But if you have money at a bank, and then all of a sudden you doubt their ability to pay you that money back, you might want to go get your money out before they run out, right? You want to go before everybody else shows up to get their money. You want to make sure you get your money before they go out. And the same thing happens with these cryptocurrency markets is that people all of a sudden lose trust. They lose faith in their ability to get their money out. And so they say, hey, I want to be the first one to get my money out. And that's exactly what started happening with Genesis, is that so many people wanted to get money out that they weren't able to meet all their withdrawal requests because no bank, I hate to break it to you, JP Morgan or Wells Fargo, they don't have all your money in the bank. As a matter of fact, go to your bank and try to pull out $5,000 of cash and see what that's like. I've done it many times. My bank tells me that I need to request the cash in advance because they just don't keep that much. And so same thing happens with Genesis. You know, they don't have all that money sitting in cash. They have it in other assets. And so when a lot of people come to request it at the same time, they just don't have that laying around. They have to liquidate other positions, and it takes time. And so they said that they told clients that it was suspending redemptions and new loan originations following the collapse of exchange FTX. It says that the turmoil for Genesis caused the company's lending arm to be unable to meet all withdrawal requests. The company told clients on a Wednesday call. The company said it would deliver a plan next week for its lending business. So we don't know what's going to happen with that, but it's a big problem. Genesis had $2.8 billion in active loans outstanding at the end of September. And who did they have those loans with? And this is what I'm talking about, contagion. Who are those loans with? Are those loans good? Can they collect on that? If they can't get that money, then what about the money that they owe back to other people? It all starts getting very, very, very dirty. Now, Genesis was the one providing yield to Gemini. So if you have money with Gemini and you were using their earned product, you might have a problem there. Gemini says it's partners with borrowers who are vetted through our risk management framework, which review our partners' collateralization management process. So Gemini says they do good due diligence. Everybody does. The problem is when you start seeing a run on the banks and you see asset prices falling, all that collateral that you thought you had that was good all of a sudden doesn't turn out to be good. Now, Gemini is potentially going to be in trouble from this. And we don't know who else is. We saw another crypto lender called Salt had to pause all their withdrawals on Tuesday, saying that the collapse of FTX had impacted their business. So I would just go out on a limb and I would just tell you that any crypto company that has any type of lending or borrowing or yield products is probably going to be caught up in this mix. Does that mean they're going to go out of business and not return your funds? No, it doesn't. But it's definitely a risk. And I don't know how to quantify that risk, and neither do you. And so I'd think about that. Anytime you give your money to somebody else, there's a chance you don't get that money back. Now, some is more risky than others. If you go find a homeless person on the street and give them their money, there's probably a very good chance you don't get that money back. There's a very high risk of that. If you give it to a FDIC insured bank, the risk is very low, but there's still a risk. All right, and you're going to get compensated for that risk, or you should be compensated for that risk. The problem that I have with these cryptocurrency products is that there's no way to quantify that risk. And so if I can't quantify that risk, if I don't know if it's 4% risk or 8% risk or 70% risk, then I probably shouldn't be using those. And so most people are starting to wake up to this, which is why they're going to get their money off of the exchanges, just like people would go and make a run on the bank and get their money out of the bank. And so I would recommend to you, if you have any cryptocurrency on any exchange, pull it off. And why wouldn't you? The whole point of Bitcoin or crypto is that I can custody those assets on my own. Now, if I wanted to store my money in cash, I'd have to put it under a mattress or put it in a safe. If I had it in gold, I'd have to go bury it in the dirt somewhere, build up a safe. If I had a lot of gold, I'd have to build up a vault, and I'd have to hire security for it. But Bitcoin doesn't require that. Bitcoin requires just a cryptographic security key. I recommend using something called cold storage. So you could use a hardware wallet like a Trezor, 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 or a Ledger. Those are hardware wallets, like a little USB drive. I would recommend that. You can also use like an app on your phone or on your computer. I don't recommend those as much, but you can do that for ease of use. But pull it off of the exchange. Why do you have it there? To earn 4%? Is that 4% worth the risk of losing it all? I would say certainly not. Now, this is going to cause even more run on the bank, and more people are going to go pull it out, and it's going to cause even more problems. But you don't want to be the last person trying to get your money off and find out that you can't get it off the exchange. So you go pull it off. With Genesis going down, this is going to cause a problem with all of these companies who didn't think they had problems. And like I said, specifically, if your exchange, like Gemini, offers a yield product, a lending product, or a borrowing product, just consider they have exposure. Now, again, it could be a little exposure like Gemini and they could eat it, no big deal. Could be a lot of exposure and could take it down. We don't know. But why take the risk for 4%, for 6%? I would say certainly not.